from Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow, daily stock market analysis show where we quickly look at the technical charts and try to understand what happened in the market and also plan for a better trade for the upcoming day. That's starting from Jan 31st, tomorrow, Wednesday, 2024. So basically we had a big bounce up in the Nifty, especially yesterday, but today we see a stiff resistance up there while it is trying to move up, and market gave up half of the gains of yesterday. So we have that kind of a day. Let's try to understand more. Here is a market wrap up where we have all the points. But actually, you can take a screenshot and look at that if you don't want to listen to the audio. But first, let's get in and have a look at the candlesticks and charts of the indices. Right. So if we just look at the candlestick, look at what has happened. This pattern is known as dark cloud cover. When the market moves above the green candle's high, and then reverses and fall more than half of the green candle. So it's a bearish pattern. Otherwise, the single candle alone is wide range bearish, as well as a bull trap. It trapped the bulls by moving above the previous candle's high and then closing much below that. So that's what the Nifty is showing. Let's see what Banknifty. See, Banknifty is also a bearish candle for sure. The width of the candle is not there, but the wick size is indicating that it also met with the resistance, and also it tried to move above the previous candle's high as well, thereby becoming a bull trap there as well, a bearish bull trap. But Nifty, it is bearish bull trap, wide range bearish, and a dark cloud count pattern which is bearish in nature, a two-star pattern. Otherwise, we also have a head and shoulder pattern. The climb of that had breached earlier, but market reversed quickly last 3 days and then negated that. But the moment it breaches it again, it may become valid. Otherwise, the price is well within the parallel channel. That's long running from August 23, and there was a decent retracement of 4.5%, and market reversed but unable to sustain the gains that was made the last 3 days. Market has fallen back again, and that's it. Banknifty had a sharper fall. The correction from the top of the channel had extended to 8.5%, and it in fact breached the 200 exponential moving average, but somehow got the support at that zone of 200 exponential moving average, and then bounced up last 2-3 days, unable to sustain net resistance with 100 exponential moving average, while trying to climb back to the parallel channel from where it had earlier fallen. That's where we are. So let's study the support resistances, probabilities of supports and resistance. So the first resistance could be the top of this consolidation zone. That's 21,851. After that you have 21,969 or 970. That's the gap resistance, and after that all-time high before the 22k, 20,000 big rounding number, and then 22,124. That's again all-time high resistance. Downside, this first support could come in at 21,350 zones, and then at 21,150 nearby you have 50 exponentials moving average, and then you have the 2950, which has got the gap support. Right after that, 2700. That's just first support resistance is on the Nifty. Like, note that Nifty could not close above the 20 exponential moving average today, which it had smoothly cleared yesterday. For the Banknifty, the resistances First we'll declare this 45,700 zone which it tried to move up today. Then we will have resistance at the confluence of the 20 and the 50 expression moving average that's coming at 46,300. Then you have 46,500 which is kind of breaking out of the channel. That, and then 47,000 resistance in the upside. Downside, once again, 200 exponential moving average at 44,600 could be the first support. A breach of that could take it to 43,960 and 44,000 zones. If that is breached, then it can go to the previous low of 43,250, and then if that also breaks, it could go to 42,000. Remember, we had retraced 61.8 Fibonacci retracement level, so that's very good correction, complete correction. You can say anything beyond 61.6 Fibonacci retracement on either side, upside or downside, would mean a sharp correction or breakout. So it had taken the support exactly at that zone, and it in fact is facing stiff resistance at the 50 retracement level, and is trying to climb above that. So what we can understand is Nifty is much weaker and done much sharper correction. He is remaining weak and unable to assist with a lot of resistances also right above, unable to assist the Nifty, and Nifty gets dragged down, unable to move along. So that's what we are seeing. Let's quickly see the wrap up. So we had a 1% nearby correction, 215 points on the Nifty, but Nifty managed to close about 21,500. Nifty close of 1%. Now patterns we already see. Remember, we had 4.5% of correction earlier, and we have rally of 31%. Correction is pretty decent. Not too much correction has happened, not as much as what has happened in Banknifty. Banknifty had a flattish close and just 75 points lost, and it had done a deeper correction, and it still is below the 2050 and the 100 exponential moving averages, having done a 26% of rally from the swing lows. Intraday price action was different in both. We had an inverted V-shaped gap up and then reversal on the Nifty, while it was a range bound both on Banknifty. So buyers, after 7 days of consecutive selling, around 35,000 crores in the cash market for DAs were remaining buyers once again. 2 days later, it's not coming. We'll quickly check if it is coming or not for 30 Jan. It hasn't, since it must have been selling again from the Fyers institution side, most likely. Resistance supporters we have already seen. The short-term momentum, the main on the Nifty, is sideways. It was unable to climb above the RSI about 60 in the bull zones yet, and Banknifty, and it is sideways and resisting below the RSI 60. Let's make it even more bearish. Resisting in the sense it hit the 60 and then take a U-turn and then come down. That's very bearish. That could go as low as the RSI 40. Now in the case of Banknifty, it is similarly resisting below the RSI 40 and diving down into the bearish zones. It's momentum bearish and sideways on Banknifty and Nifty respectively. With respect to the trend indicator ADX, it is still remaining more or less in the bear zones and has not crossed over to the bull zones yet actively. So technically the market gained a little bit momentum yesterday, but lost. Overall it is still in lack of momentum, and the trend in the short term, and the sideways momentum in Nifty and bearish momentum in the Banknifty after having a correction of 4.5 and 8.5% respectively. Correction may not be that great one for the Nifty after such vertical up moves of cracking the 22,000 from the 20,000 in just a matter of 1 month. So that kind of correction has not come in yet on Nifty, and if Banknifty is breaching this 200 exponential moving average for the third time again. We have trouble. Head and shoulder is negated as of now because price is still above the neckline. Otherwise, it can that head and shoulder if it works out on the daily. Head and shoulder is more reflecting on the larger time frames of weekly and monthly. But if it works out on the daily, by breaching the next line once again, it would take it as low as the target of 2700. We have a Feb 1 Fed meeting outcome and a Indian Union budget also coming in confluence with that. So we could expect a lot of volatility in the market. That's what exactly we are seeing the last several days. The VIX spike has climbed above 16 after probably 1 year or something. So there is a lot of fear in the market right now that is mounting up. Premiums are high, but so is volatility. If you look at the industrial sectoral indices, you can see it's all close flat except for the metal and reality. And if you see the different sector momentum analysis, you can see that it's all sideways except for the auto, which is somehow maintaining the bullish momentum. So it's a sideways move across the sectoral indices. And if you look at the heavyweight stocks that contribute maximum to the index, they are all red today, except the ICICI Bank, which has some flattish green. Individually, the Infosys and the Stellantis are maintaining the bullish momentum despite all of this up and down moves. All other major heavyweight of this major 7 stocks, all of them remain sideways except the Infineon Reliance. And in fact, ITC and Reliance, among the heavyweights, have fallen more than 2% today from whatever the market has fallen. If you analyze the US indices, it is showing some green at the top. Remember, we had a rally, and the US market also had a similar rally along with this, or the other vice versa. Dollar had fallen today, and rupees remains to be weak at the 83 kind of levels forever, as it is managed by the Reserve Bank. Crude oil is fallen. Remember, it was trying to move up after having a deep cut, and where it went even below the 70, and now it is trying to move up, and it has a fall red day today. Gold is spiked up and it is consolidating at the top after making an all-time high several weeks back. Not ready to come down, still remaining there, consolidating, and today we have a spike. So that's all, and that's all the major analysis is. So to wrap it up, the dip that happens probably in a bull market may be an opportunity to buy small chunks of good quality stocks, right? And for a trader, the direction is not clear. There is divergence between Nifty and Banknifty with a weaker chart seen in the Banknifty. So we have to wait for that sync to happen where everything turns negative. Everything turns into one direction. As of now, it is not there. So similarly, if both are in the sideways, so two things you have to see is the Nifty and the Banknifty in sync, and also if the multiple time frames of the short term and the medium term, daily and the weekly, are they in sync. If there has divergence between them, probably have to wait for that to happen. In sync in the sense both the time frames has to be sideways, both time frames has to be directional, either upside or downside. So until that happens, it may make sense to wait because there is some uncertainty. So you have to be cautious because of the events that's coming. The market can be damn volatile, where all the rules of these analysis and studies may go for a toss when such major events, even if it is a vote on account budget that's happening, people may speculate more as compared to other days, and then volatility could come in. So you have to be cautious. Tomorrow we have the Banknifty weekly expiry. The levels are very weird. It's 43,500 and 47,000. Such a wide range. That means whoever is speculating is expecting 3,000 plus kind of big moves that could happen anytime. Right, that's where the highest protocol writing is seen. Right, 3,500 points apart, and it's bearish momentum that you're seeing at 0.73. And if the charts we already analyzed, So speculate based on these levels as indicated by the open interest of the options as well as the technical charts that we already studied earlier. That's all I have, and if you have feedback, comments and all that, please put in that, and if you like it, hit the like button, and if you're not subscribed, please subscribe and share it to friends and colleagues so it reaches all the max. That's all I have. Happy trading, happy investing. Bye bye.